Well, hello, traders and investors. It's LA Little, and this is your daily NeoTA wrap. Take a look at these markets from a neoclassical perspective, and that means we look at supply and demand on the charts, and we ask ourselves, what's significant? How was it tested? What does it tell us about the coming days? Do the show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube and under the channel LA Little. If you haven't subscribed and you want to the show, just reach up in the right hand corner, do so. Anytime I push content, you'll get a notification. Before we hit the charts here, let's look at the numbers. It was a down day. It was a pretty big down day at one point. As usual, though, they come in and start buying this thing before it's over. Dow finishes down about 0.5%. S&P a little bit more than that. Russell was the big loser again, 1.13 on the way down. If you look elsewhere, you actually had some metal action. Gold, they picked it up. Oil services there finished flat. The yields continue to move higher, or were continuing to move higher, and then they flipped around. You had oil up slightly. If we go up here on the bonds, they finished flat. Over in Europe, SSMI, not in Europe, but over in the, well, actually that is the SSMI. That is Europe. The rest of Europe's down here, 1.3, 8.86, 0.85. Asia was pretty much flat. It was up in China on some good data, but in general, most of the markets finished lower on the day, despite the big push up at the end of the day one more time in our indexes. And you can see that here. Big tail, big long tail again. We've seen these over and over again. When they push these down, you get these tails where they come in and they start buying them at key spots. That's what they did today. And you can't really see the key spot as much here as is if you bring it over on the S&P 500. And what I mean by that, well, anytime you break a swing point high, which is what we did right here, anytime you break it, right, the first trip back, if it's more than 6 bars, which it's been way more than 6 bars on the weekly chart now, anytime you come back, the first trip back, usually about a third of the way down is the most you can expect. You should get an immediate attempt to bounce out of there as a result of that. And so if we look at this, closes at 21.1172, that top 21.1105. So what does it do? It trades into it, flips back up, closes over it, wants to try to bounce again, folks. It's been this way for a while, and it's going to be this way until it stops, right? Now the good thing is that they keep coming in and buying it. The bad thing is that you're running out of these things that should turn it. In other words, we had one here. We can go back to this one. First time back on this one, what did it do? Right here, trades into it, leaves a long tail, attempts to regenerate to the top side. Didn't get very far, right? Tries to regenerate, doesn't get far. What happens again? Now they come into this one. It's going to try and regenerate again. If it can't, when it comes back the next time, there's nothing here to save it the next time around. The other thing you were doing is you were coming in on volume-wise. You were coming in 1, 2, 3. Actually, we can do the volumes over here. Today was Tuesday, so we have 2 days. 84, that's about 47 multiplied. It's 5, it's 20, 35. And if we go back to this breakout bar and this one, yeah, it's going to have heavier volume if the volume pace picks up or holds about where it is. So right now you're attacking it with more volume. That's going to be a negative if that continues to hold. So overall, it does what it needs to do or has to do and should do. As long as it keeps doing what it should do, you can't get overly excited about things. The bad thing is you're running out of good things to lean on, and that could potentially become a real serious problem. Let's look elsewhere. If we look at the NASDAQ does the same thing. Now the NASDAQ doesn't quite test that low. It gets close to it. long tail on it, flips back around. Again, these things look like they want to bounce. And I didn't show it on the S&P, but you actually finished off the ABCD structure on the weekly on the way down. If you look at the NDX also trades into those big bars, gets under this low, gets back over it, holds it, doesn't break that. So it's still actually, even this far down, still in a bullish stance. Russell. If we look at the Russell now, the Russell has been the laggard. He's been pressing all the way down this entire time. The Russell, just like the S&P 500, it finished off an ABCD structure on the way down as well. You had it from there to there on the way down, finishes it off today as well. So they've all done what they wanted to the downside, and actually that was about right there where it finished it. They've done what they wanted to on the downside. You do get some volume expansion today. Sometimes, when you get those volume expansions on the way down, especially after multiple days down, you'll get some sort of a bounce. And you have a pretty good press going on. So, a bounce out of here would not be unfathomable. Matter of fact, it would probably make a lot of sense. So I see, where we are today, how we traded at the end. The buyers came back in, sellers disappeared. That looks to me like it's going to set up some sort of an attempt to bounce. Now, if you're talking about a bounce, you got to look at the rest of the world, and the rest of the world doesn't look so good either. In particular, I was talking about the European markets. If you look at these European markets, right across the board, you got some bearish action taking place, right? Huge bearish engulfing. These things were up. Then we started trading down, kept trading down. They flipped around, joined us, and they went all the way south. They don't have any volume escalation, so that's a pretty negative bar. If you bring it back on the weekly, it doesn't look nearly as bad. You're coming back in one more time to be swing point highs. You really would like to see this hold and try to flip back around. If you look at the oops, sorry about that. Let's get that out of the way. If you look at the CACs, you got the same thing. If I go over to Switzerland, now Switzerland, of course, has been a lot weaker. Switzerland just continued down today. That one is coming down to test those lows. Moving over to Asia, you actually had the Hong Kong market get that bounce we were talking about last night. And a big part of that, of course, was the news coming out of China, better than expected economic numbers, and they got a decent little pop as well. Elsewhere in Asia, it was pretty flat. Couldn't get anything going there on the Nikkei. If we move over to the debt instruments, here's the bonds. Bonds were down, trying to break down again. They flip it all the way around. You got some volume escalation now. When you get that and you leave it at the lows, which is what happened here, you can easily come back and test it, and we could see that as quickly as tomorrow. But the bonds did save face. There looked to be a little bit of a panic starting to take place as we were escalating down today, and that was when the bonds caught a bid. If you look around the world, or even here, if we just look at the TLT, right, this thing has been traveling to the south. A lot of people are talking about, you've got bonds caving in, but you got to remember where they came from. I mean, from 118 to 143, you're back at 130. That's a pretty decent retrace, but I don't call that a cave in. You're like 35% on the way back of the move. I don't know that that's a total cave in. Is it great? No, it's not. But these things are creeping down. Money seems to be coming out of them, but at the same time, it's not as if there's this panic to get out of bonds. As a matter of fact, any kind of panic in equities sends people right back to the bonds. Finally, if we look at the currencies, if we take a look at the currencies, dollar, remember dollar had made that big charge. Everybody's worried about the dollar going to the moon. Well, what happens? It gets up there and it starts to retrace, and that's typically what happens. What are you retracing in? Probably this bar as a first point. If you get past that, then it's back down to be swing point highs. I don't think it's going to get that deep. If you bring it over, put it on the weekly, on the weekly, you actually have an ABCD structure. That was here. It finished it. Right now, it's getting the retrace coming back in to that swing point high. The fact that it's coming back in within 6 bars says it can trade all the way to the bottom third of it, which means somewhere around 25. So if you're looking to be long, That's probably ought to be focused on. Finally, if we look over at the FXE, and a little decent push up, going up to those swing point lows, or at least towards them, and doing a full retest regen on this swing point low. And if we look at the Japanese currency, somehow or another, the Japanese are getting what they wanted with their targeting of the 10-year rates. They have an ABCD structure on the downside, but they couldn't keep it going. And so now you got a little bounce coming, and that was from there down, right? You got a little bounce coming back into this. We'll see if they can hold. They're going to do a retest regen off this swing point low, do a full one. That's what they're doing now. Tonight we'll see what happens there. You got the Fed tomorrow. Expectations, nothing happens. The real expectation is what happens as a result of the election as it tightens, and the worries are that something else is going to hit this market because of it. We can't guess what those exogenous things are. What we can see is on the charts, we're getting the bounce where we should. How far it can carry, probably before next week, it's not going to carry that far. Question is will it just roll back over and start breaking down? If it does, there's not a lot more to save it on the way down. So the market has had what it needed to maintain itself. Now it's up to the market to find another reason to rise versus to fall. If we finish here with the a look at volatility, volatility was really starting to pick up today. You can see that escalation here with that long tail. It looks to me like this one's going to retrace as well. This is about the area that you'd expect it to come back to if it's just going to simply do an ABCD structure, right, and try to move on up. I don't watch the volatility that much. This one is worth watching right now. Where do I think we go tomorrow? I think we get a bounce. I don't know how far it's going to go, though. It's probably going to be tough to get very far up. Question is will they be able to maintain it wherever they push it to into the election next week? Have yourself a great one. I'll see you next time. Good night.